Give and Grow, what is up? Eric coming at you. You're in for a special episode today. We're going to be talking about the precious metals, specifically investing in them. We're going to talk about gold and silver today. So let's get into it. It's going to be a fun episode. Yeah, so why should you invest in gold? Well, I view gold as insurance for your portfolio or for wealth preservation. So when you think about your dollars, the purchasing power has been going down over the last 30 years by a large margin, and we don't see that changing anytime soon with what's going on. The amount of printing that's been done, the amount of debt that we have in this economy, a lot of crazy things. So gold is insurance. I recommend like a 10% allocation. And that's going to kind of offset. So my good mentor Rick Rule likes to say that over the next decade, the dollar is going to lose about 75% of its purchasing power potentially. So gold is going to offset that if you have that in your portfolio. You don't want to compare it to Nvidia or other stocks. You just want to compare it to other currencies. So when you compare it to the dollar, the gold is superior, and it's going to help you through this next decade, which could be a little bit on the inflation side. So that is my biggest thing for gold. It is insurance in your portfolio, and it is real money. So question I get all the time, how do you buy gold? Well, for me, I start with the physical gold, and I love the Sprott Physical Gold Trust, PHYS. Basically, this gold is going to be held in a vault in Canada. It's going to be audited. It's safe. It's there. There's other ways you can do it. You can use the ETF, GLD. I think this one is based in London, but this is more like paper gold. I don't know if it's necessarily 100% backed. It's supposed to be. They don't have as many audits. You can do either one, but when I compare both of them, for me, just when it comes to safety, I want the real thing. I prefer the physical gold, PHYS. You do that through Sprott. You can do that on Fidelity. You should be able to do it on Vanguard and other ones, but you definitely want to be in one that's a little more global. So I don't know if you can get in Robinhood and do it, but you definitely can do it on Fidelity. That's PHYS. Get your physical gold. Have it stored in Canada. You're going to be sleeping well at night. Some individuals, they want to buy physical gold and they want to hold it in their hand. They want to have it in their home, or they want to store it in a vault or something. Some people want to, bury it in their backyard. That's okay. You can do that. Sometimes there are fees. There's things you have to realize. You got to consider security. You have to consider the elements that they're in. So for me to sleep at night, like I said, I prefer to use the market's way, and that's going through Sprott and using Fidelity. Just typing in PHYS, buy a couple shares, and I'm off and running. So why do you invest in silver? Great question. If you look at the silver chart over the last 20 years, it's not the most beautiful chart. We haven't been in a precious metals bull market or a gold bull market like we are right now. Let me tell you, as this gets going, silver is going to go parabolic. But there's reasons for this. There is a supply shortage that cannot meet the demand for silver. We use silver in a lot of things, from our cell phones. I think they're used in vehicles. It definitely has this huge industrial aspect to it, but it's also considered, it's still considered it has a monetary aspect as well, but not as much as gold is. But yes, with silver, as the gold market gets going, people are going to look at the price. They're going to see how gold has gone from, 2,000 to 4,000, and they're going to be like, wow, I don't want to pay that price. But they're going to see the silver price around, between 40, 60, 70 bucks. I'll pay that. Just remember, silver is going to be more volatile. It's going to be more cyclical. It's not something you want to buy and hold forever. But as you get towards the end of a gold bull market, it is going to have its best moves. But you definitely want to take your money off the table when you get those gains. When you put one chip on and it turns into 3 chips, take those 2 chips off. That's how it's going to be with silver. But it is going to have its day. All right, how do you buy physical silver? Well, just like with gold, some people want to start off buying the coins. Some people just want to, store it in their home, put it right next to their gold. That's okay. You can do that. That's perfectly fine. I personally don't like doing that, but everybody's different. Just like the physical gold Sprott fund, you have one for silver, and I think the ticker symbol is PSLV. If you want to use the ETF version, It's SLV. You can do both of these through Fidelity. Just like with gold, if you were to buy the PSLV, that's going to be stored in a vault in Canada. It's going to be audited regularly. And that's the way that I prefer to buy it. Everybody's different. You can get the coins. You can do it through the ETF SLV. I personally like buying it physically through the Sprott funds. Why invest in the gold miners and the silver miners? This is another great question. You got to view this as kind of a levered play on gold and silver. If you look at GDX this year, it's up around 130%. Gold's up like 60%. So the miners have actually doubled what gold has done. In some situations, like with the silver miners, it can be tripled. So there's a lot of leverage in this. You don't want to put your whole portfolio in this. You want to do like maybe 10, 15% at the most. Sometimes you just want to pick the best companies, but there are risks with miners. There is volatility. These are real companies. They have balance sheets. Not every management team is great. Some are better than others. Some of the districts that they're in are not the safest. There's political things, so there's a lot to think about. If you want the safest route, go with GDX. You're just going to have a diversified amount of some of the top. You're going to have about 40 companies in there, but the best will make that ETF do very well, very well. SIL for silver is another great one. If you want to take a little more risk, you can do GDXJ, you can do SILJ. That's just the juniors. Be careful. There's going to be a lot of volatility with that. But you invest in these miners because it is levered to the gold and silver price, but this is their time. If they're good companies, they have been preparing for this. The quality is there, the due diligence is there, and they're ready to take advantage of this. The margins are going to be, I've been looking at Franco-Nevada, I've been looking at Wheaton Precious Metal. You're talking 40%, 50%, 60% margins. These are great companies, and this is their time to shine. I think this is going to be a great decade for the miners. What are some specific mining companies that I like for gold and silver? You got to start with the best of the best. Franco-Nevada. This is a royalty company. Their balance sheet is amazing. They have very little debt. They only have 40 employees. This is the best gold company in the world. I repeat, this is the best gold company in the world. Their price has already moved. You're going to be paying a premium for this company, but it's worth it to me. I said GDX was up 130% this year. Franco-Nevada was up about 75%. Got 2 or 3 weeks left in the year, but I'll take it compared to the S&P 500 being up 17%. Going down the list, Wheaton Precious Metal. This is a streaming company, a little bit different than the royalty company, but basically they finance for exploration and producers, and they get paid with the metal itself at a discounted price. And with royalty, I didn't mention, with the royalty, it's the same thing. They finance, but they get paid a profit of the revenue throughout each year. So these are great companies. These are great business models. If you want to go with producers, start with the best of the best. That's Agnico Eagle. Newmont is okay. I'm not the biggest fan of Barrick, but that's just a handful to start off with. If you have those, you're probably going to get the beta out of this bull market, and that's going to be plenty for most people. When it comes to silver companies, I like Pan America Silver. If you want to take some risks, you can go into First Majestic. If you want to take a lot of risks, you can look at Empress Royalty. That's technically a gold royalty company, but 40% of their revenue is from silver, so it's basically a silver play. But those are just some names to throw out there. I have all of those in my portfolio, so just want to mention that. But my favorite, without a doubt, is Franco-Nevada. All right, let's talk about some risk with investing in precious metals. You have to remember, this is very cyclical. So if you're taking this advice, don't take all of your assets or all your money and put it in gold, silver, and the miners. Some people are going to do that. They might do pretty well, but that's too risky. You always have to consider risk. Risk is what you can't see. You have to remember, this is cyclical. This is not going to work in every single investing environment. Something that's not cyclical is more like the S&P 500. Over time, it's going to go up a majority of the time. You're going to have 5 to 10 years every now and then where you're going to have some neutral stuff going on, but overall the market's going to go up over time. If you're invested in silver the last 30 years, you have not been a happy camper until now. There's been situations like that with gold, but like I said, you don't compare it to the S&P 500 or Nvidia or Berkshire Hathaway. You compare it to currencies. So when the dollar is not doing well, which is right now, which is a majority of the time, but right now it's really not doing well as our debt gets worse, as we continue to lose purchasing power, this is the time for gold to shine. So you have to take advantage of that, but view it as insurance. The people that study this stuff, this could be a tough decade, the next 5 to 10 years, but the people that understand commodities, gold, silver, oil, copper, uranium, they're going to be able to offset a lot of this in their portfolio, and they're going to actually outperform a lot of portfolios. So it can be a good decade for these people, for individuals, but you have to do the research, you have to understand the stuff, and you have to gain the knowledge. So just know there are risks. I'm not telling people to put their whole portfolio in this. I think combine everything in my portfolio that's dedicated to this is between 30 to 40%. And I'm trimming, and I'm also using options. So there's safer ways to do this. But just remember, there's risk with any investment. This is kind of the atmosphere where these things should do well. But just remember, if we have some kind of, like a 2008 type event, everything's going to sell off. It's not like the gold miners are just going to keep going, gold and silver is just going to keep going up if we have some kind of event. So just know there's risk with any investments. Use a little bit, trim when you want to. When stuff goes on sale, the quality, take advantage of that, and you're going to do very well over this next 5 to 10 years. All right, guys, that's it for today. We love you. We hope you'll have a great holiday season. Please like and subscribe if you like what you heard today. Just to kind of go over one last thing, remember there's risk with any investment. Do your due diligence. We got a episode coming out in the next 2 to 3 weeks. Ryan's actually going to open up our portfolio in the joint account. We're going to take a look at some of the companies I mentioned today and some of the companies I didn't get to mention. It's going to be a great time. But like I said, have a great holiday season. We love you guys. Let's continue to give and grow.